Yeah,
We're literally all matching. Sam, before you jumped on, I literally just said to Tyler, should I go and change my top? so we don't look like we coordinated this. Well, it's the White Top Money Show.
Yeah, it's White Top Monday.
Brought to
Only
you by
people in
like
white shirts
Target
allowed.
or something.
It's a good
I thought when you came in, Sam, I was like, God, there's only one thing Sam could be wearing that would not be good. It was a white shirt. I think we keep it. I think, you know what? I actually think I started recording. I think we just roll with it.
Yeah.
Honestly.
It just looks so boring with all of our white backgrounds and our white shirts, but we'll keep it.
For anyone who's listening, this is a money podcast, and we're all very excited that we're all wearing white t-shirts. So that's
when you win,
the highlight.
When you win in investments, you get to wear dingy white shirts at 7:30 a.m. with your homies. This is the upside. Welcome to the upside. Oh, snap. Well, boys, welcome. I guess we're just going to kick it off. Welcome back to another week. First and foremost, I just wanted to say thank you so much to everyone who's shown love. I think we were all a bit blown away by everything that happened last week. I don't really think any of us were expecting that. Our channel did get terminated yesterday, but we're back. And we're here with another episode. And what better way to kick this off than talking about CPI? I don't know if you guys checked it out. I was looking at it right before we got on the pod, but CPI came in a bit worse than expected. Sam, I know that's kind of your thing. So maybe if you want to kind of walk us through what's been going on here. I know energy prices just went, it's carrying everything up basically.
Yeah, the headline came in at 3.8 versus 3.7 expected, and then core was, I think, 2.8 versus 2.7 expected. Obviously, the market already was pricing in that CPI was going to go higher, a large part due to, energy prices. I didn't get a chance yet because I was just filming to look at how it's broken down, but I read that it was largely due to that, which makes sense with the war. Where I'm at, gas is $5 a gallon, and 6 weeks ago is $3 a gallon. So yeah, I don't think it's too surprising to people, which is why I don't think we're seeing a really negative reaction from the market because it's already priced this in. And obviously if most of it's from energy, it will go down if this war in the Iran goes away. But it's interesting.
Yeah, I was looking at it just now, actually, right whenever we jumped on it. I'll pull it back up real quick. And sorry, obviously, everyone, for the setup. I know it's a little janky right now. I'm out of town. But what we can see here is, it's just energy, bro. Like, even if you look at energy overall, April month over month, it's up 3.8. Energy commodities up 5.6. Gasoline of all types, 5.4. And fuel oil, 5.8. Now, if you actually look at it, no surprise here, you can see that March was substantially worse. The month over month in March was crazy. 30, 21, 21 compared to 555. I think the biggest thing that just scared the market a little bit today is the fact that this came in just a tad bit higher than expected, right? I think it seemed like we were kind of moving into a position in which everyone understood the impact, like the economic impact that this whole Strait of Hormuz situation would have on inflation and all those things. And so for it to kind of cause a surprise, I think that's what scares people more than anything, because I think we all thought it was kind of clear how this was going. So it's definitely interesting. But like you said, Sam, it doesn't seem like the market's that scared of this.
No. And I feel like part of the reason we're down today, because we are down at least in the pre-market. Did you guys see the Anthropic news?
All I saw was Rover made a post. It was like, I saw a red candle and I scrolled past it because I didn't have time to check it out, but I didn't see what happened now.
The valuation of Anthropic, like the pre-IPO price, because it's not public for people to buy yet, but it went from 1.4 billion to 900 billion overnight, basically. And it's not because of the underlying business, it's because they came out with a report saying that any secondary stock sales that they did not approve, they weren't going to honor. So like, I don't know, you go through certain apps, like a Robinhood adjacent app, you can buy, I guess even on Robinhood, you can get like access to their venture fund, right? And they go buy shares and then give you kind of the right to those shares if you pay a certain price. But they basically said, yeah, we're not going to do that. We're not going to honor anyone that's bought that. Assume that your shares are worth nothing. So it caused a lot of people to freak out and try to get their money out, I think, as soon as possible, and caused it to drop 30% within 24 hours or 12 hours or something like that.
I didn't even know pre-IPOs can... I guess it makes sense. Obviously, the valuation is based on the capital raise, but I didn't even realize they can do that.
Yeah, and like that changes all the time because it's not just capital raises where, I don't know, where Amazon comes in and says, this is the valuation we'll pay. Now there are all these other secondary sites where it's like you have buyers and sellers matching up. So yeah, you have real-time data all the time on what the company is valued at. And obviously it's moved up very quickly. It would be one of the top 10 highest valued companies in the world right now. And it's spun up in the last 2 or 3 years where it actually was prominent. So I think that's scaring the market a little bit. Just because whenever you see $500 billion of a company vanish overnight, people are like, okay, well, maybe I should hold back and see kind of how this shakes out. But I don't know. I've been going down the AI rabbit hole, as you guys know, the last day. So I'm my brain's a little bit cloudy right now because I've been thinking about all kinds of stuff.
Before we get into crazy AI, because also I'm kind of in agreement with you, Sam. I want to ask you guys a question because I'm sure this is on a lot of people's mind right now. For me, as when I'm traveling around and I see, I'm in different cities, things are getting more and more expensive, right? People are complaining more and more. I don't know if it's the same for you guys, but over here on the other side of the pond, people are complaining more and more about the government. Things seem to be getting worse, right? From this perspective, for your average person, the market, well, not the market, the world seems to be getting worse. However, asset prices just keep going up. In simple terms, can you just explain why you guys think this is happening? Because it doesn't, I think first of all, probably the people who are listening to this podcast know that, we're at all-time highs for the S&P 500, but a lot of people that I speak to, right, just if I'm at the pub or whatever, a lot of people that I speak to aren't even aware it's happening. Right. So how is there such a huge discrepancy between the life that normal people are leading, the news of a literal war that's still happening, and then the S&P 500 and the overall American stock market, the Japanese stock market, and then insert stock market here being up double digits?
Yeah. I mean, so Sam, maybe I'm curious to actually know if you agree or disagree with me, but I think the reason why there's such a disconnect between the fact that asset prices are climbing so much right now, but general cost of living and quality of life is declining is purely the result of inflation. And if you just consider it, right, just consider the impact that inflation typically has, money printing as a whole has on a society, it is this. And that's what part of the reason why so many people were warning, hey, this whole money printing thing is going to lead us down a rabbit hole in which the wealth gap especially starts to grow to a point where it's unrecoverable. Because the second where you inject trillions of dollars into an economy or whatever it may be, and inflation starts to climb, it's going to have kind of a binary effect. On one side, you're going to have asset prices going up because they have to. It's almost as if they have no choice. They have to go up because it's the only way that people can match the increased cost of living, basically. But at the same time, when all of the prices of everything is going up in general, people as a society, they're not going to change their behavior. They're not going to change their spending habits. They can't, realistically. I mean, you can't just make your mortgage get less. You can't just make your rent get less for the most part. Things just get more expensive, and there's not enough wage increase or anything of that nature in order to cover that gap. And so because of inflation, what happens is assets are forced to go up, and oftentimes the people who are invested in them benefit from these sorts of moments in the economy. But at the same time, the people who are not invested and the people who are just living normal day-to-day life, they're going to take on almost all of the weight and all of the load off of that. And then it creates kind of this perpetual cycle in which the rich get richer and the poor get poorer. That gets extrapolated like crazy in moments like this. And I think it's one of those sucky situations to where the people in control know that happens. They just don't care. So I don't know. I don't quite see a way in which this ends because they're talking about printing money again. So right. I don't know. But Sam, I'm curious of your thoughts.
I think if you look at the average person, let's look at the average retiree. Let's say they're set up pretty well. Maybe they have a house that's paid off worth $500,000. They have $500,000 in investments, and then they have Social Security, two people's Social Security. They're not touching their home value. So if the asset price goes up, it doesn't help them. It actually hurts them because they have higher property taxes, higher insurance costs. There's nothing good that comes out of your house actually going up in value unless you're going to move, which is crazy because a lot of people don't think about that. I guess eventually maybe you can refinance if you are leveraged out, but normal retiree, it just hurts them. Their retirement account, they don't look at every day, right? Okay, their 500,000 goes into 550,000, but all of a sudden they have to spend $10,000 more a year on expenses. their social security doesn't go up fast enough to offset what they have to spend on goods and groceries and that kind of thing. So their day to day is they just see things get more expensive, but in the background they're getting richer, but it doesn't really translate because every day you're looking at everything get more expensive. And as we know, like if a good thing happens that's equal to a bad thing, you think about the bad thing more. So like even if you're getting as wealthy and like you can cover the increase, like it still hurts. So that's the good side. Like assuming you're not super wealthy, that's like the better side. The worst side is you're someone that's 25 years old and you're just out of college, and it doesn't matter that asset prices are going up because they're going up kind of against you. Like you don't want them to go up as much because you want to buy as much as possible now, but all of a sudden everything's, you know, the S&P 500 is up 100% in 5 years. And, you know, you might not even make enough to go live on your own at the same time you're paying student loans. So I think that's where there's a lot of unrest is like, unless you're really wealthy, and we've talked about this before too, like it's really hard if you're not wealthy. Like, like I don't, as even the people that get wealthy, like I still think about what it would be like to not be, and it stresses me out. So I can't imagine like the stress that people feel, and they keep on seeing the wealth.
Are you saying you're wealthy, Sam? Is that what you trying to get?
Yeah, I'm just trying to pat myself on the back.
Odd thing to say.
Yeah, but like it's yeah, and people continue to see the wealth accrue to the top 1%, and it makes sense because they're the ones running the businesses that are getting all the value. And where do they put it? They just put it back in the stock market because like where else are you going to spend you know, $10 million or $100 million or $1 billion? And I think that's going to continue to happen with AI because I think there are going to be more people that have just a lot of capital. I mean, we all invest in the major hyperscalers. There are more there are less and less companies that can compete with Amazon, and they can continue to squeeze people. Just today, they announced 30-minute grocery delivery. Like I can't do that, but Amazon will get groceries to my house in 30 minutes in certain cities. So like, I think the value will continue to accrue to those people and the people that own the companies.
Yeah, it makes sense. That's an interesting thought is like, even if, because yeah, Sam, I mean, think about it. Say you hit the lottery, you win like an $80,000 lottery. You're a guy who's in college. You want to invest all of it. You just invest all of it into the stock market, and that's climbing anywhere from, you know, $8,000 to $16,000 a year over the last 2 years. Just because that's going up doesn't mean that like you can now automatically afford higher rent and higher utilities or higher costs, or especially if you have children or a wife, like unless you start selling it. But no one who invests wants to sell their investments, especially at a young age. It's an interesting thought that unless you have an income that's tied to asset prices climbing or in some capacity, you're still going to have some sort of like disparity there. Because us, for example, I think we can all say here and sit and admit for sure, like we're in blessed positions because we have jobs that we get paid more as asset prices increase because we cover assets. You know what I mean? But if you just had a normal set wage and you have a good portfolio that's climbing, that still puts you in a spot to where unless you're cash on cash, yeah, like unless your cash is increasing monthly, you're still going to be struggling unless you just start selling it. But who wants to do that?
Yeah. Yeah. And it's hard to model out to where we're going to be in 10 years. I think that's where a lot of people are getting anxious right now, kind of going back into the AI conversation. Like for the last 20 years, things have been pretty similar. I think like the thought process on the future, maybe since like internet, right? Internet was probably really uncertain. I wasn't around for that, like, but I'm sure that there was a lot
Yes,
of
you are.
weariness. Yeah, but like that also rolled out over like a slow period of time. Like, yeah, we think about 2000, right, as like the AI tech boom, but like there's internet before then. It wasn't like all of a sudden over 1 year, it's like, okay, internet's going to take over everyone's jobs. Like, I'm sure that there are some fears like that, but now we're getting to that point where we don't know what 5 years into the future looks like, especially when you think about how much, like $1 trillion just from 4 companies or 800 billion from 4 companies. Like that's not going to nothing. That's going to make like AI very good at its job and to be able to store all that data and stuff. So I don't know. I think it's really hard for people to even care about 20 years down the line or 30 or 40 because they don't know what if they'll have jobs in 5 years. And if they're not thinking like that, they're left behind because they should be thinking like that.
Like I keep having the same conversation, and Sam, I do want to get into your both boom and bust theories of the AI sort of landscape we're going into, because I think it's very exciting. It's very exciting, but it's also really scary, right? I keep having the same conversation with my friends and people I meet about the way AI is kind of changing the landscape. And essentially my opinion, right, is anyone who right now, whether it's within investing or within sort of work and what you're doing, if you ignore this AI train, right, you're going to be part of that 20%, 30%, 10%, whatever the end up unemployment rate becomes at, you know, the distant future, when everything may, you know, when we realize, oh my God, AI's, you know, taken over the jobs of what people don't expect, right? I think, you know, like if you're a web developer, a photographer, a designer, all of these things, it's surprising to me how many people are like, no, AI's like, I see it, it's over there, but like, no, people want me to do it. And I'm like, no, like, you know, I was showing someone yesterday how I can make a website in like literally 1 minute using a picture of like nothing important and make it look all nice, right? That I used to do Shopify drop shipping, and it used to take me 3-4 days to get the perfect website up, to get everything ready. I could do that in 5 minutes now, right? So it's like, but that doesn't mean, right, that AI is going to replace, for example, the me who did ecom, right? AI is going to replace all the time and all of that effort, but you're still going to need to be creative. You're still going to need to have these ideas. You're still going to need to be an entrepreneur or a business, like, you know, working in a business that does this, but it's like using AI to your advantage. So yeah, it just surprises me how many people are actually, you know, shying away from this AI thing. And, you know, Sam, I think you're also going to have an opinion around this, but just like, where do you think, like, we're talking about, you know, the separation of the higher class and the lower class, right? The middle just gone. Right. So, and an AI is probably just going to, you know, along with inflation, exponentially increase this. So how does your average person avoid being, you know, left in the dust?
Well, I agree that people that don't use it will be left in the dust. I mean, we get what, 5 emails a day from people that want to make our thumbnails. And now we've started to use AI, and it's so much better. I don't care if it's a human or a person. Like, I want it to be fast and I want it to be cheap. And I can type into ChatGPT, do this, and then within 30 seconds I have a photo. And a lot of it does require like we post videos right after we film them. So like that, there will be people, maybe 5% of people, the older generation, that want people to do their stuff. Like at the bank, they wanted to talk to someone, right? So they wanted a real person there instead of an ATM, or they don't trust it, or they're doing a big transaction, or it's something weird. But eventually, yeah, like a lot of jobs just will go away. I was just talking with someone, and I feel like it will sound removed because we hear about these stories through the internet. Like, I've already heard this, or I've read it on X, but like I heard this in real life from someone that knows someone that did this. They had a bunch of coders, and they laid off, like, I'm talking 3 figures of coders working on something. They laid off all of them and hired back the 5 that actually use AI, and told them, your job isn't to code anymore, it's to tell things to code for us. And they replaced 100 plus coders with 5, and it's better. And like, they save 95%. Of course, they're paying some in token usage, but I think you have to embrace AI. And there's so many people, like, we're in a very small space. There's so many people that don't use ChatGPT, or they're like, hey, where should I go for dinner? And that's like their like usage of it. That's all that they know. But yeah, I think you have to be in an industry that requires humans. I think obviously, like, the medical industry will use AI, but it won't replace doctors right away. Like, there's some things that just are really important that if you get wrong 1% of the time, like, people won't, even if doctors get it wrong the same amount of time, they won't accept that it's a robot that does it. Or like plumbing, if, you know, some robot destroys a pipe and then it bursts and then it takes like days, or ruins a building, that won't be okay. So I think being in some job like that that's high risk will help. And I think just trying to save as much as possible and invest to protect yourself to get through the hard time. Because I think there will be a helicopter money. I mean, we've talked about universal basic income, like where the government just pays you even if you don't work. But you have to get through that period where maybe it's like 6 months or 12 months or a year or 2 where they're trying to figure out what to do, where you're laid off, but the numbers aren't bad enough, where they're helping people. You have to be able to weather that storm. So yeah, it's going to be tough and weird.
And one thing I will say as well is, a lot of people, whenever we talk about like, okay, this whole AI thing is coming, people are going to lose jobs. What are we going to do? What will people do when they lose their jobs? It's almost as if we're imagining that the world in the future will be the same world that we have right now. Like, the certain resources and opportunities that we will have in 10 years will be the ones that we have now. But the truth is that it will be different. Through AI, there will be jobs that we've never heard of. that become available that can be open to the mass public, that are needed for the mass public. And what will those be? I don't know. People have no idea, but you can think back to the Industrial Revolution, right? Prior to the Industrial Revolution, basically everything was man-made for the most part. Then you start to go through this period in history in which these factories and machines start to take the jobs away from humans because they can do them more efficiently, cheaper, and faster. But through I guess, the evolution of the Industrial Revolution, what ended up happening was these factories had certain jobs that needed people to fill. So although people weren't doing the same jobs as they were before, there were still things that were needed in order to keep pushing humanity forward. And I think there will always be need for human labor in some capacity or another. How does that look? I don't know, because I don't know that much about AI personally, but I am vastly aware that the resources and opportunities that there will be in the future will be different than the ones we are now. And so trying to guess what humans will do when that time comes can, in almost some capacity, be a waste of time because we can't know what the future will look like. And I don't know if that makes sense, but I do like to think about this whole AI thing similarly to the Industrial Revolution, because I think it's one of the clearest examples of a point in time in which humans were blatantly replaced by some sort of thing that was not human. And we just figured it out because this is what people do. You know what I mean? So it'll be interesting.
I do think that that's like the more positive way of thinking about it. I think I haven't looked up how long the Industrial Revolution took place, but I've got to assume it was over a much longer time span than what we're going to see AI take over. So I think that's the big question is, how do people react when this happens over 2 years versus 20 years? I mean, like, how long does it take to build all these different Industrial Revolution things, move them in, word of mouth spreads, and like people get fired where they had time to figure out new jobs? But this might just be literally like 2-3 years. Most jobs that are high paying, they're, 6-figure jobs. You're an accountant, all of a sudden you just plug them into your spreadsheet and then they're like, okay, here's your document for the end of the year. Like how quickly that happens. So I think that's the difficult thing to know.
Yeah, because I think the Industrial Revolution was like over 50 years. I don't think it was 20. I think it was like 50, which is true because there was more of a transition period.
Yeah, and like this, I think we'll have jobs that open up, and maybe we just turn more creative, right? And like it's not necessarily a bad thing for some industries. Like, sure, Facebook, like people might not have money to spend on Facebook, like buying products for a little bit, but also they're going to have 5 million new people a day that are watching like 5 times as much or whatever when they get laid off. So it, like, some of this stuff can balance out where some businesses will take a lot of advantage from all the extra attention. Even us, like a lot more people will be watching YouTube if they're not working.
Yeah. I think if anyone's listening and they're feeling like this is a little bit of a doom and gloom chat, I think there are going to be a lot of layoffs. However, me, Tyler, Sam, we've all made our money being essentially proactive, right? Like, we make videos every day when people are like, I thought you could only make YouTube videos once a week, once a month, right? So I think we'd all agree that our advice right now is, don't think of this as a negative. Think of this as 100% a positive. And this is the system, formula, or whatever it is to make you the best person in the room. So like, what I would do right now, if I was still working, I would literally get Claude. I think Claude's a little bit better at this sort of thing than ChatGPT, but I would open Claude and I would just ask Claude straight up, how do I become better at my job using you? And then just go through that process, right? And listen to Claude and have that, and then be the best person in the room at using these new tools, right? And do the first mover advantage. Every time there's something new, jump on it. When there's an update, jump on it. Do all of that. And then you won't be replaced by AI. Right? Just like the Industrial Revolution, not everyone was replaced by machines. You won't be replaced. The other 20% or 80% or whatever it ends up being, right? So I don't think it's doom and gloom. I think it's bloody exciting. And 100%. Again, I still am super excited about crypto because of the change it's doing and did to the financial system, right? And I think AI is just another new version, another thing like that, right? And the people who ignore it, just like they did in 2017 when I first got into crypto, and they did before that, and all the way up until now, right? They're only hearing about it now. Bitcoin was 100K. They all bought it and get annihilated later on, right? When you can just be the first mover, and that's your opportunity, right? So I don't think it's all.
And something to consider as well, but and I know we've been kind of talking about this whole AI, like changing of the world thing a bit, but one thing that I also consider is that, like, it would be bold to assume that every person and every company has the ability to integrate AI to such a high capacity that it replaces human beings. For example, I live in the southern United States. One of the biggest things that we do here, like in terms of earning revenue, is trades. HVAC, especially electricians, etc. It would be bold to assume that every HVAC company in the southern United States is going to somehow have robots that go into your attic and fix your air condition when the time comes that it breaks. No, it's just not even reasonable to assume that that's coming anytime soon, because one, these companies, think about the investment that it would take from them for that to happen. But two, people in general just wouldn't want that. They would just want a guy who knows what he's doing to go fix the air condition. So I've always been a massive proponent of, like, if I was going to start from scratch and I didn't want to take the online route, because it is hard and it is very saturated in some capacity, trades are good. And I think trades will be fine for a while, especially person to person trades. I think it's still a great way, honestly. And I just don't see that, especially down here, that changing anytime soon. But
yeah, also sales. Also sales. I think sales, I think I have like a weird expectation that AI is actually going to make salespeople more money. So like real estate agents, right? Yeah, of course. Like I have no doubt in my mind, 10 years from now, you'll buy an apartment on an app. And there'll be no lawyer, there'll be no real estate agent, there'll be no transaction where you go and sign all this nonsense and it takes 3 months. Like, it's absolutely ridiculous, right? And it's longer than, 6 months, a year. Like, it's crazy. I have no doubt in mind. However, there will still be always the need for, in my opinion, and there'll be even more of a need. So there'll be less people doing it, but the people who are doing it will get paid exponentially more, right? Because they're good at sales. And I want to be sold. Like if I'm yeah, you got all the information. I still want to be sold by someone, right? And I don't think that's going anywhere.
Yeah, 100%.
I'm just gonna go back to like what you were saying, Connor, that people should be excited. I think this is probably the best way, like the best time to make a lot of money if you're someone that doesn't have many skills and doesn't have much money. Like there are so many businesses that could use AI, but the person's worth, $50 million or $100 million, or they don't care, they don't have the time because they're spending it with family, or they don't know enough about it. Like everyone hears about AI, but a lot of people, like I don't even know how to use it very efficiently because I'm not spending 5 hours a day or 10 hours a day using it. And there are ways to plug in one AI to control and like connect to ChatGPT, Claude, Gemini, Grok, and then use all of them for whatever they're best at. Like there are normal people that are doing that now, but like, yeah, there are people that are getting laid off because there are people that are figuring this out. But if you can go to a business and say, hey, I'll like, just give me some time to run the strategy for you and just give me like 20% of whatever I save you at the end of the day. And they spend 10, 20, $30 million a year on employees or, whatever it is. You can make a lot of money that way, first of all, or you can do other things that can make a lot of money with AI. And like, this is, I don't know, this might be similar to seeing the 2008 financial crisis or the .com bubble before it happens, where some people know that it's happening, but they don't know how to approach it. But I think there's going to be such a quick change up that people can make life-changing amounts of money if you're just proactive about it. But yeah, I don't have the time to do it right now. And I'm just past the point where I really think that it would benefit me to lean into this hard and go to other businesses because we already have our own businesses. But yeah, it's just unbelievable the amount of money you can make if you're just better than the other people at it.
Yeah.
And you have any kind of connection or make a connection with someone that could use it.
Yeah. It'll be interesting, man. It'll be interesting. And I think one way or another, all of this stuff, all this AI, everything that's happening right now, it will have its implications and impacts on crypto, on stocks, on real estate, on job markets in general. And I think if you can benefit from it, or try to capitalize on it in any such way, you'll be fine. So I guess kind of with that in mind, and just to pivot a little bit here, the stock market's been interesting for the last week. I think many of us have been watching, especially the S&P 500, just completely outperforming almost everything else. Sam, do you kind of want to take us through, what the last week has looked like here in the stock market, and if anything of significance has happened that's kind of caused this, just to keep rallying like it is?
Yeah. So over the last week, let's just pull up VOO. I guess I didn't pull it up on here, but over the last month, VOO, the S&P 500 is up 8.5%. Over the last week, still up 2.5%. Of course, we are like right 5 seconds before the market opens on Tuesday, but yeah, the market has just continued to rally, and it's all the big names in AI. Like day after day, Micron, AMD, NVIDIA, they're up 3%, 4%. And the question just continues to come back to, like, I made a video on this yesterday. Do you invest in what's up 400% in the last year because there's not really a sign that it's going down? Or do you invest in like the end user that's spending a lot of money, which is the major hyperscalers, Amazon, Google, Meta? Where do you invest? Because I don't feel comfortable investing in NVIDIA or AMD or Micron or SanDisk when they're up 400%, 4,000% SanDisk is up in the last year. But also, yeah, like if you had said the same thing a year ago or 6 months ago, you would have lost a lot of money, like if you hadn't invested in them. So at the end of the day, like those are what's really dragging up the market. There are a lot of equities that are down 20 to 30% from all-time highs. A lot of them. They're in the S&P 500, but it's just being pulled up by all these major AI companies. I continue to invest though in these major hyperscalers because they have massive amounts of profit. If they scale back on AI, they're going to be able to do massive buybacks, dividends. They're going to have so much cash. They're already seeing revenue growth. I don't think there's the same level of risk investing in those as there are the companies that they're writing the checks to. But that's kind of where I'm at. I think a lot of them are trying to, like Google and Amazon are trying to replace NVIDIA and AI with their own CPUs and TPUs and GPUs as well. But there's just so much demand that it doesn't even matter. Like, so I am taking the approach of investing in the major hyperscalers, investing a bit into Bitcoin, and then investing in the indexes because they'll continue to take advantage of, all the AI companies going up too.
Yeah. Connor, have you been making moves since we recorded last?
Yes and no. I think what's so interesting about what Sam just said about still investing in the indexes, right? I think right now it's more apparent than ever how well it does you holding indexes, right? Because yeah, cool. If you had chose SanDisk, fine. Ignore what I'm saying. You're an absolute G and you're sitting on billions right now. But like us muggles who can't see the future, right? Like even missing those and, being bullish on Microsoft or whatever it was, just simply holding the NASDAQ has done not significantly the same as like SanDisk, but it's done so well and taken zero mind share away from, for example, building your own business, increasing your income and putting that into the NASDAQ, right? It's taken no time at all. And it's like, it's so interesting to see. So what Sam's saying right now, you've got Microsoft, you've got Meta, you've got at some point recently Amazon, all down 20 to 35%, I think it was, right? But those aren't up. Only Amazon is back up, right? But the NASDAQ is at all-time highs. So it's like, even without having, like, let's say you're Sam and you were like, okay, the hyperscalers, they're the ones who are going to benefit. In the time we're in right now, the shorter term, that's not wrong, but it hasn't been proven correct as opposed to investing into AMD, SanDisk, blah, blah, blah. I agree with Sam. It will be proven to be correct. But just having the NASDAQ has got you the access to all of those things that you never even knew had the opportunity to grow. So that's what I'm still doing. I'm doing the same thing as I was already, dollar cost averaging S&P, NASDAQ, all world. That's just my normal DCA. I slow it down in moments where I see outsized opportunities in other products or other companies. Right now, for me, I'm particularly excited in Microsoft, and Meta, because I think those are down unfairly in comparison to the rest. And I think it's just a matter of time. I read an article today. I don't know if I still have it. Oh, I do. So there's 4 companies, right, that are going to spend 725 billion or plan to this year, right? This year. That's Google, Microsoft, Amazon, and Meta, right? And all of those, apart from Amazon, are down. I think actually I don't follow Google because I'm not invested in it, but I know that Microsoft and Meta are down. Amazon is up. And essentially, people are like, we don't want you to spend all your money on AI. But like, AI is about to literally change the face of the earth. And the biggest companies in the world, who so far in my lifetime have done the right thing at the right time, right? And they might have got messed up in the 2008 crisis. They might have done this. COVID might have done them, whatever. Meta created a metaverse, changed its name from Facebook to Meta, and it's still up, right? It doesn't matter because they have so much money, so much profit. They can put the money where they need to. And all of these companies are seeing AI as the way forward. So if they're correct, which I would assume, and again, I'm shifting the thought process to them outside of me. Let's just let Mark Zuckerberg decide, right? He reckons AI is the one to do. Microsoft, all of them guys, they think AI is the one to do. Amazon, same. Google, same. So why would I be put off by this spending? And why would I not look? Okay, the NASDAQ all-time highs, but Meta's down 25%, right? Because people think they're spending too much money on AI, would as one of the things, right? But like what, and so that's what I mean by the outsized opportunity and risk to reward. So I'm still deploying into these big guys. I'm still slowly DCAing, and then like Sam, if Bitcoin continues a bear market as I think it will, I will continue to DCA into that as well.
And it's you know,
I want to
no, go ahead, Sam.
I just jump one thing in before I want to hear your thoughts on it. But I think a lot of people forget that these are like the best capital allocators in the world. When you look at the number of businesses that Meta, Amazon, and Google have bought and then grew into billion-dollar businesses, 10 billion, 50 billion. I mean, what Meta bought Instagram at like $1 billion, and then it's worth hundreds of billions of dollars now. They forget that they're actually like much better. They're like the Warren Buffetts of the world. They're actually as good as the best investors in the world. And they also have so much capital that they can just throw it at something that makes no money right now for the next 10 years and will be massively profitable later. So I think people don't give them enough credit. And then also, I think this was the first quarter where we actually saw all this major CapEx spend directly benefit all these companies, where they had reacceleration of growth when they're already, doing tens of billions or hundreds of billions of dollars a quarter in revenue growth. And all of a sudden it ticks up faster. And I think that was why we saw Amazon go up 30% in a week or two, or maybe a month, because people are starting to actually give them a little bit more benefit. But I guess on the other hand, Meta didn't. So it's just an interesting time where people don't trust them. But sorry, Tyler, I want to hear your thoughts too.
No, that's totally fine. And, it's an interesting thought, because since our last conversation, I've really put a lot of thought into the question of whether or not this whole AI thing is just about to all collapse. Because on one regard, I think we all have like that little hair sticking up on the back of our neck, like, ooh, if anything could get really ugly really fast, it's all of this. Just, anything that goes up really high can go down really low. But there's two things that have really stuck to my brain, and I wanted to talk specifically and kind of get your thoughts, Sam, because I know you've been down the rabbit hole a lot recently. There's two thoughts that I have. Is one, is the market simply just rebalancing? Right. So you look at the stock market and what made up the stock market in the 50s, then the 60s, then the 80s, then the 90s, and the 2000s, 2010s. There have been multiple moments where companies have come to the face of the economy and really made such a large impact that they've kind of gained a ton of share and just inflated the whole thing. They just brought the whole market up because of the impact that they were actually having on the world. Tech is the easiest example to think of, especially in the last 25 years. And so I almost wonder if everyone's saying we're in an AI bubble. I'm just like, is it just a rebalance? Is it simply us just saying this thing provides so much new value to the world that that everything has to just come up? And if it's just that simple, well, it could be, this might not even be overvalued, because one point that you made not too long ago is think about the spending. Think about the actual investments that they're putting back into AI. It's not like the 2000, and 1999, 2000, 2001, where it's all of these companies taking on major valuations, but they don't do anything. It's a bunch of fake. It's a bunch of smoke and mirrors. They don't do anything. They just call themselves a .com company. They have no product. They have no customers, no service, no revenue, no profit, nothing. And they're surely not reinvesting back into anything. And then when people come to recognize that, everything blows up. You think about the 08 financial crisis. It was a lot of smoke and mirrors that led to the collapse. Whereas when you look at what's happening right now, these are legitimate companies making legitimate impacts, earning revenue and reinvesting it back into the same model that got them where they are in the first place. That to me sounds more like a rebalance than a bubble, but I don't know.
Yeah, I don't think it's a bubble. I think the point that some people would make is that there's real revenue, but a lot of the revenue is coming circular, where Amazon invests in Anthropic, and Anthropic says that they'll go reinvest money into Amazon, and then it's just like the same $50 billion being recycled. But I think the fact is, like, the ChatGPT, Anthropic, like all these major companies are seeing so much revenue come in, and they're seeing so much potential that they need more money to reinvest to be able to make more money. Like, it's just growing so quickly that there's not enough time, and they don't want to wait 2 months to get the money in to be able to go buy more processing power, because then they'll lose an edge. So then, yeah, the major tech companies are like, well, we don't want this to become the next $5 trillion company, $10 trillion company, and for us not to get a piece of it. And I think there are major security concerns that people aren't even thinking about, like what Anthropic did. I think they shut down resale so that there weren't foreign entities and there weren't people that they didn't approve of, and that might be coming from the government. Like, who can actually own this might be restricted. So I think that there's just massive growth. So some people are pointing out the circular thing. I don't think that's much of an issue. I think it's just growing so fast that they need money from somewhere, and those are the companies that will spend money. And we're seeing it from investment banks too that aren't doing circular financing. They're just spending $25 billion at a time. But yeah, I think that there's real change, and I think a lot of people don't understand that yet, because like, I don't run 100 or 1,000 or 10,000 person company, so I don't see the day-to-day usage and how it can do jobs better. I just read about it and doesn't hit as close to home. But yeah, I think there is a repricing in the NASDAQ. All these companies are making massive amounts of revenue very quickly. Micron, they're at like an 8 forward price to earnings ratio, and they're $1 trillion company all of a sudden. Like, they just doubled their revenue from last quarter, and they're expecting it to drastically go up still, like just straight up. So yeah, I think I don't know what to think. My conversation yesterday was pretty lengthy with someone that was really well connected to someone in the AI space, and his thought process was be very aggressive the next few years, very aggressive investing, and then realize that there's going to be a massive layoff period, civil unrest possibly, because it happened so quickly, and buy assets. He was actually talking about selling a lot of his assets, but buy assets that you can enjoy now that are also somewhat defensive, whether it's land or like a big ranch or something, which is what the really wealthy people are doing. If you look at like Zuckerberg, Peter Thiel, like a lot of these people are buying bunkers or ranches and like loading up with essentials. And for them, it doesn't really require much. Maybe it's 1 or 2% of their net worth, and it's like a fun place to go visit anyways in the meantime. And there's some tax benefits and that kind of thing. I think that's really hard for the normal person though, that's just trying to make payments day to day. So I don't know how actionable that is. But yeah, I've looked at some of that like over the last day, like, oh, maybe that land purchase that I was thinking about just didn't really make sense because it's too far away. Maybe that's not the worst idea in the world if I can swing it, that kind of thing.
Connor, let's play devil's advocate and say all this does come crashing down. Like this all the music ends. You know what I mean? Like it just gets ugly. Do you go in heavy? What do you do? Like what? Because I would say, just to give Connor flowers, which I don't like to do. You've had a history of really being able to recognize when it's a good moment to put in, right? What do you do if we start to see this? And I left that joke for I left that joke for the crypto bros. What do you do, man? What do you do in that situation if all the music stops, the market starts to pull back, and this is like a crash scenario that's just waiting to happen?
Well, yeah, this is the tough thing, because like I ebb and flow from like feeling like I'm a trader to feeling like I'm an investor, and then I'm like, oh, investing's boring, it goes up slowly, I'm a trader again. So there's two. So let's just put it this way: the way I negotiate the ADHD of the type of trader / investor I am is I just do both, right? And the frustrating thing is, kind of every few years you kind of feel, okay, that's the thing that I can just do. I can put the money there and then I can trade to generate cash flow. And this is what we were discussing like the other day, me and Sam, like, what if the S&P 500 now or whatever, because we're talking about like, reducing property exposure and increasing just overall broad market stock market exposure. That's kind of how we all feel, right? But then you're like, okay, well, God, if 3 years from now there's going to be an 80% crash, so then I do want property, because do you know what I mean? So that's where I want the money. So it's just this constant ebb and flow. So my idea of how I'll behave is, right now I won't go lopsided into anything, right? I want to keep a diverse portfolio because that way, no matter what really happens, right? Whatever really happens, the most catastrophic event in the stock market will hopefully not affect property in the same level of catastrophe, right? Obviously, if the stock market crashes, there's going to be a period of uncertainty where property doesn't do well. Also, Bitcoin, which I'm sure we'll discuss a little later in the podcast, crypto and stuff. It's like Bitcoin in a market environment that AI is absolutely annihilating everything because it all came down, not because AI didn't work out, but because people don't have jobs and, you know, civil unrest and all of that. Bitcoin in that environment, right? Maybe we're in a place where, you know, one of the bull theories I've heard is essentially AI is going to need, so us three here, right? Right now, we've maybe dabbled a little bit with having AI agents, right? We know of them or we use them a little bit. None of us really use them. But let's say 10 years or 3-4 years from now, when this hypothetical crash happens, let's say we have 10 agents, right? We got one agent that edits our videos and does the thumbnails and does all that. We got one agent that consistently looks for new opportunities in the market. We got another agent that literally just books my flights. We got another agent that looks after my mum when she needs a question and answer for something, whatever, right? They all need to transact somehow. And one of the ideas is they'll be transacting in insert crypto here, right? Because it's fast, permissionless, decentralized. The bank can't come in and check. They'll just be doing it between themselves. And if I have 10 of them, that's 10 times more transactions than what I would do, right? So my idea here is essentially, in this world where the economy collapses, it's collapsing because of civil unrest, not because the AI companies failed. So in that scenario, crypto is a perfect hedge against that. So as long as I keep a diverse portfolio, mentally, I'm going to feel fine. It's going to feel bad in a crash. It'd be horrible, obviously, if we go through something like that. But we have to always remind ourselves, and I was actually discussing this surprisingly on the channel today. If you look at any crash in history, right? When we discuss it, looking back on it, we think the 2008 crisis, oh my God, it was so bad. Years upon years upon years, the lost decade, 10 years, right? Where people, 10 years, like you'll have a conversation again in the pub where insert person here is adamant that the stock market lost money for 10 years. That's actually not what happened, right? From the high to when it went past the high, that was 10 years. But there's this whole period, we have it in the crypto winter, it's 3 years, right? Where, or 2 years, 2.5 years. But there's this whole period that as long as you keep investing and you keep buying slowly over time, you actually reduce that 10-year period to about 3 years. Now, the important thing is you keep your job in that moment of time, which is also why we keep a certain amount. I think it's probably all of us sit at 10% cash. So we have 90% invested, 10% cash. And that's the buffer that you need, right? And in a 1 year downturn, right? In a 10-year thing, the actual down market was only let's say, I think it was 520 days in 2008, something like that. That was actually down. Right. So if you can survive that, right, you invest, and then all of the booms come after that. Right. So that's what your 10% cash buffer is. And to answer the question, sorry, I always go off on these yappy tangents, but my plan is I'll buy the dip. Right. And because I will have been trading up until that point, I should have enough capital to do so. And then you take advantage of the opportunities that lay in front of us, whether it's the actual AI companies that collapse or literal, brick and mortar, like Coke or whatever it is, right? Taking advantage of the opportunity. So that would be my plan. That's what I've done this whole time. And hopefully the thesis of having a diverse portfolio, I think the most important thing in moments like that is being mentally sound, right? Every time in the last year, we've had 2 fairly sizable crashes in short periods of time. And because it's the first time in my life that I've been I've had the mental clarity to not at all panic, I've taken advantage of those dips and it's worked out perfectly. The only one who hasn't worked out great so far in this dip is Bitcoin, but it has done exactly perfectly the last 2 bear markets. So again, that's how I'll play it.
Well, that's an interesting, that's a bit of a transition there because I did want to ask you guys. So we're going to release this. Today is Tuesday. We're going to release this either today or tomorrow. By the time we release this, there will be within 48 hours. So we can actually say we got 48 hours left, Sam, of the Clarity Act. There's going to be a markup vote. And for anyone who's watching who doesn't know what that means, basically what's going to happen is that the Clarity Act, which is currently in the Senate, they're going to put the final version together. They're going to put it for a vote to see if basically the entire Senate approves this version of it. They're going to go through a vote. If the vote goes successfully, what ends up happening is that gets put into law, or it doesn't get put into law. Sorry, it gets put through for presidential signature. There's still going to be one more vote that would need to happen in June. Prior to that, there's a lot that needs to happen, but this would be the step that actually starts getting this going to get there. This would be this technically could be the second to last vote that needs to happen for the Clarity Act to actually go into law. And so because of that, a lot of people are speculating that if this does happen successfully, let's say we go into tomorrow, the Clarity Act does pass this markup vote. We have one more vote left and then presidential signature needed. It would align perfectly with this going into law at the end of 2026, which also hypothetically could align perfectly for when these sorts of bear markets do end in crypto. Because although we may want this to be different this time, like you said, Connor, the crypto market is moving exactly the same as it has every single time. So do you think there's a world in which that coincidence of this whole Clarity Act catalyst goes into effect and causes nearly the market to move exactly as it always has, and we do find a bottom somewhere later this year?
I think yes. I think, but also no one's going to realize it's that, right? Because the end of the bear market is never a explosive event. The end of the down period of the bear market last time was literally like when Russia invaded Ukraine, or like one of those stories, right? So the Clarity Act passing, and whether it's actually a bullish event, yeah, it depends on what actually happens. But that might be the underlying catalyst that helps liquidity flow again into the market. But that bottoming period, October, November, maybe September, whatever, right? End of the year-ish. It won't be like an explosive event. It will just be the bottom. No one will realize it's the bottom. Just like if 60 is the bottom, no one knows if that's the bottom or not. Like no one will know. But that's when we start to slowly climb. So I'm in, certain terms, like I'm not expecting, I'm expecting the end of the year to be in and around the bottom. And a news event won't be exciting for anyone because no one will care. And then it will just start to slowly rise. And then people will realize once again, we're in a bull market. But any specific event like the Clarity Act passing, I don't think is going to be like, people are like, okay, when that happens, the market will pop. In fact, it will almost definitely go down like that day or within a 2-week period, because the ETF, like people knew it was coming and people front ran it. It went all the way up and then it crashed, right? And then we ran because of the ETFs. So I wouldn't be waiting for that as an opportunity to, have confirmation the bear market is over or anything. But I do think it's going to help liquidity if it has, the good things. But, part of me, well, I think we were discussing it in the last one, right? Banks are obviously opposing it, but I kind of just feel like, the USDT or whatever will essentially be a bank, and then we'll be like, yeah, cool, everything's good. So
yeah, that makes a lot of sense. Sam, do you kind of look at? I think we talked about it last podcast, but I can't remember exactly. Do you kind of see it the same way in terms of time horizon? Like, do you think end of this year could reasonably some sort of like, if you had to guess, could reasonably be a good time to assume some sort of bottoms in for the market?
Yeah, I think we'll go lower in the second half of this year, and we'll hit bottom when no one expects it, when there's a lot of bad news. It will sound the worst at the exact bottom, and then we'll start to recover, just like always, right? It will sound like we're only going to go down, and people will be calling for 30,000, 20,000 or something when we're at like 55 or 50, and then we'll bottom then. I haven't been spending too much time on Bitcoin and crypto just because there's not much going on. Like the Clarity Act isn't the biggest catalyst, in my opinion, for Bitcoin, and that's where I'm mainly invested. I realize it's a catalyst, but I don't know. There's not much to do in the bear markets for crypto. So like I'm thinking about AI and stocks and stuff that I can actually that move a little bit faster now, because Bitcoin's great when you don't think about it and you just buy it during bear market. So that's kind of where I'm at. And like Connor said earlier, like it makes sense for all these AIs to transact on crypto, and in a world where there's abundance, where let's say, there are a lot of AI robots 10, 15 years from now, like it's much cheaper to go get resources in places where it wasn't cost effective to do it, and then build houses for very cheap. And then maybe it displaces a lot of real estate investors, which I know a lot of real estate investors that have recently sold because of AI. And I know there are different thoughts about whether it makes sense to have property or not and that kind of world. But like, there's going to be such a change up. I think in a world where there's so much abundance and there's so many resources and knowledge and stuff, they'll want to buy a hard asset that's capped. Not necessarily the AIs, but everyone. So I still think there's a narrative for Bitcoin to do well. So I'm just going to continue to add slowly.
You know, it's an interesting thought. And Connor, I think you'll maybe have a thought on this as well, because it involves things like SoFi and Sam, even Melly a little bit. A lot of people have always wondered with companies such as SoFi, let's just use them as an example. They say, how can SoFi capitalize on or close the gap that's being created right now between AI companies and everyone else? Because that's really, there's a very clear disparity right now. And one of the thoughts, at least, that I've seen people present is that the Clarity Act could actually bring an opportunity to companies like SoFi to have their own route to success that maybe doesn't involve AI. Because let's say there is a world in which the Clarity Act passes, regulations and legislation's clear, and then SoFi can start to capitalize on crypto trading like they were before. Because people forget, SoFi was capitalizing on crypto trading for a bit, but they scaled it back because of the regulations and the fear that they would be getting involved with some sort of lawsuits or whatever. And that was a moment where we came to realize, like, wait, there's a complete vertical. This whole crypto vertical with stable coins and assets under management, this could generate them tens of millions. I mean, think about, for example, let's say Clarity Act goes into effect. SoFi starts to kind of ramp back up into the crypto side. They've already been building out the stablecoin infrastructure. They bring on a couple $2 billion of stablecoin deposits onto the platform, which I think is more than reasonable compared to what Robinhood their projections have been. And then they're able to generate another, tens or low hundreds of millions of dollars worth of revenue. That could be something in itself that could actually bring more value to SoFi that has almost nothing to do with AI, and start closing that gap between them and other AI companies and actually bring interest back. And so an interesting thought is, does the Clarity Act also add fuel to those stock fire as well? Because these companies are starting to be able to integrate things like stablecoins into their own models and build up into those verticals. I think it's an interesting thought.
Well, if SoFi has the ability to offer quote unquote interest, it will be in the form of something else, possibly, probably. But I think that's exactly how companies like SoFi use the Clarity Act to, increase their market cap, but also increase literal liquidity into crypto, right? And that's why and how the Clarity Act can actually be bullish for crypto. But one of the reasons why I recently bought, me and Tyler, we were together when I bought SoFi recently, and it's talked about a lot less in the SoFi community and the stock world, right? But I'm coming from the crypto world, and I'm seeing a stock, right, SoFi, that is not in any stretch a crypto stock. That's not what it is. However, it moved with crypto. It went up and it went down with crypto. So therefore, in my opinion, there's a very obvious connection here, right? So something like the Clarity Act, something like the bottom of the crypto bear market, right, gives incredible opportunity for someone who's looking at stocks, especially if they want a high risk, high reward sort of play. And I think SoFi will benefit specifically from this, and it being down so much, and maybe even going down a little bit more with the crypto bear market, with the fact that the stock itself is in a bear market. I think it's a great opportunity, and these sorts of catalysts are the ideal thing. So an investor like me, I'm looking for these stocks that are beaten down, right? And it's interesting because when you talk about SoFi on YouTube at the moment, you have like sort of these two opposing sort of avatars of people who are watching and investing or whatever. You have the one person who's done their research, they've looked into the company, they're either talking about things like I'm talking about because I'm interested in the crypto side, so I'm seeing that as like a great risk to reward when it comes to buying the SoFi stock. You see the people who are excited by this, but then you also see the people, just like in crypto, who bought the very top because the price went up, and now they're disenfranchised because the price went down, right? And this is the key to how you literally just destroy any opportunity for you to be the person that is in that K-shaped recovery we spoke about at the start, where the rich get richer and the poor get poorer. You are literally putting yourself in the poorer gets poorer category by having that opinion, right? And I know that might be hard hitting for a lot of people, and it sucks because it's hard to hear, right? But you don't buy anything because price up, right? Never buy it because you hear someone talking about it. Never buy it because the price is up. Look at the fundamentals and, like a company for what it's doing. So to bring it all back, I like Sofi for what it's doing in crypto. It's not a crypto company, but it has the opportunity, like you said, Tyler, to benefit from something like the Clarity Act, which gives it an outsized risk to reward. So in an environment like this, where it's down 50, 55%, maybe even worse, instead of being disenfranchised, now ask yourself, am I in this? Did I buy this because the price went up, or did I buy it because I believe in the company, the underlying, thesis around it? And do I think that this could eventually be something that goes back up again, but I'm willing to ride that volatility? And that can be the same for SoFi. It can be the same for Meta, for Microsoft, and for Amazon, depending on where they are. Don't buy Amazon now, even though it's an incredible company, just because the price is up, because then you're going to end up being like, because on a day like today, Meta's actually up 0.05% as we speak, and Amazon is down 1.5%. Right. And you're going to go, why on earth do I even do any of this? I'll just keep winning. And, because that's what so many comments are. You don't worry, I just bought, so the price is going to go down. But because you're buying because the price is up. Right. So,
yeah. So I almost wonder, like, if it's don't, just primarily focus on something just because the price is up. If it's don't buy something just because the price is up, I guess you want to, like, would you consider the alternative of, is it a better time to start looking to accumulate on the things that people aren't really interested in right now, that they're not talking about right now? And if you go further down that rabbit hole, it's, one thing we've not talked about on this podcast within the last hour is any sort of altcoin. We've not talked about Ethereum. We've not talked about Solana. We've not talked about XRP, BNB. And the truth is, not a lot is happening. Not a lot is happening. But is that in itself a reason to pay more attention to them right now when no one else is paying attention to them, especially something like Ethereum that has so much institutional ties? I'm curious about that.
It's just so boring. Just so boring. And I don't my answer is so boring. Like, just take a little bit of your cash, right? If you want a little bit of risk, buy a little bit. And then when it goes down next week, don't whinge, don't moan, just buy a bit more. Just shut up and buy a bit more. If you're not going to do that, then go and buy the S&P 500 and just shut up. It really is that simple, right? But I think right now, yes, now is the opportunity if you want to be the person who makes money from investing, right? I actually think it's a much better thing to be doing, to figure out a business, make money from that business, and then just invest in slowly over long periods of time growing assets. Basically, just buy the S&P 500 and Bitcoin in whatever split you like, risk to reward being less risky in the S&P 500, more risky being more in Bitcoin, and just leave it at that. But if you want to be like me, who's a degen, who's a nutcase, yes, I have made outsized gains from doing this, but it's stressful, right? And you can decimate yourself. You can lose everything. But right now is the moment where everyone's left. Right now is the moment where there's a 50-50 chance we go down again 50%. But right now, in the moment, back in 2018 and 2022, which is where I deployed capital, right? Less so in 2018, but some, and then significantly more in 2022, and then significantly more this time round. This is where the huge outsized gains are made, but only if you can sustain the volatility. And also on the flip side of that, you understand that quite literally, if you're going to buy an altcoin, right, even Bitcoin, it can actually go to zero, right? So yes, now's the time to pay attention to it if you're a degen like me.
Yeah, I think it's hard because altcoins didn't do that well last cycle, and I don't think there's a lot of people thinking that altcoins are going to change the world anymore. Like maybe there are people that think that, but for the most part, I think most of us think that 4 or 5 cryptos will actually be used, and maybe used a lot. Some people still think Bitcoin is going to take over the dollar one day, but even some of the hardcore Bitcoiners have kind of pulled back on that a bit. So it's just like, yeah, you're just using them for trading. If it's anything besides like the best altcoin or Bitcoin or whatever else, it's like what's the point? Just to flip it into more money later. But then you have real companies that are having the most pivotal point in history where there's so much opportunity in the stock market. And it's difficult too, because last cycle everything went down. So it wasn't like you saw your neighbor getting rich from Micron or from SanDisk or from Nvidia. Everyone was getting poor in 2022. But now altcoins are just kind of dying. People aren't that excited about them. Same thing with Bitcoin. It's going down and everyone else is getting rich if you don't have any stock exposure. So yeah, it's just a weird scenario.
I want to push back a little bit because I feel like it's better if we don't always agree.
Yeah.
But I disagree. I think we did have altcoins run. And I think that there's always an opportunity to like not cherry pick. I'm not saying that that's what you're doing, but to pick a reason why something is happening and say this time is different because of X, Y, Z, just like the bull market not ending where it did, right? This time's different because we got ETFs this time. Psych. We're 50% down and no one realized, right? It's the same thing now. Like, yeah, we didn't have an exciting alt season, but I think the same amount of money went into just things that people didn't notice. XRP went up 7x and everyone was like, no altcoin did anything. Solana went to $18 to $300. No altcoin did anything. Sui, like I did a position on there and made like I can't even remember, like massive amounts, right? So it's like, I think it is very evident that this time is in fact different, but every time is different. And I think it's like I'll die on this ship because of the diversification that we spoke about earlier, right? So like I started crypto being all in and then I slowly diversified out. So let's say if 25% of my allocation, my net worth goes to zero, I'm fine. I think that's a viable allocation for anyone, whether you have $1,000 net worth or 100 bajillion, you know what I mean? Like that's what I'm willing to risk. But I think it's very easy to look at the market, say, okay, altcoins didn't really do so well last time. The S&P 500 is at all-time highs this time, bear market-wise, where it was actually getting close to lows last time. We have things like this. But then you could also argue, hold on a minute, we also have an ETF for XRP, right? I think we have an ETF for Dogecoin. So it's like, I think that, and of course, oppose me, Sam, I'm more than happy. I think that like, there's never going to be a 2021 like bull market where everything rises, right? But I do think that the amount of liquidity will be more every time, exponentially more, and they'll flow into assets like Dogecoin, XRP, Solana, definitely Bitcoin, Ethereum, right? And that will just happen. And then there'll be meme coins and there'll be shit riffraff all here and there that we can make 1,000x on, hopefully. But yeah, I think it's like so far this view has done me right. And I'm prepared wholeheartedly to be wrong, right? To be wrong with this, but so far it's done me right. So to switch it up because this time feels different, feels wrong, because I always hold on to the memory of COVID, right? And, you know, there was a time, and it's easy to forget this time, but there was a time where, you know, it crossed my mind that the world was ending. Right. And I know that might sound crazy to say right now, but there was a moment there where I was stuck in Australia and I was like, is the actual world ending? Bitcoin dropped from $9,000 to $3,000. Right. I just bought and I was like, the actual world is ending right now. Like I can't go anywhere. I'm stuck. All the companies are going to close down because no one's going to have any money. We're going to fall into like this chaotic, you know, the supermarket has no toilet paper. Do you know what I mean? The world's ending. And guess what? Like there was something that we could never have, like I could never, as the person I was, I'm sure there was economists that figured this out, but like I could never, as the person I was, even today or then, go, okay, well, they're going to do stimulus. They're going to do this. They're going to do all of these things. People are going to get locked down at home with extra money. So therefore, they're going to put it here, here, here. These are all things that I could never have fathomed, right? It's like I can liken it to what's happening right now in the Middle East. Some of the countries in the Middle East that are worse for wear, the UAE being one of them, right? The property market, it's a tough time right now. However, just like COVID, I think the same thing will come out, like the fruits or the flowers of what's happening will come out, and there'll be this like, oh, that's so obvious, but only from hindsight, right? So to bring it all back again, I think bear market vibes for crypto has always been the opportunity to at least be paying attention, and that's what I'm going to continue to do.
And that's why I keep on dollar cost averaging. I do agree that there was an alt season, but it was very selective. So it threw off a lot of alt investors. Even if you had picked XRP, but you bought 5 other top 20 altcoins, there's a chance you lost money, or at least from just buying Bitcoin. So that's why I like to leverage part of the portfolio on Bitcoin and then just hold Bitcoin with the rest instead of trying to pick out the winners. But I do think the money will continue to flow to the top 5. I do really apologize, but I do have to go here, guys, because I have something like right now. But you guys can keep going.
Cool. All right. See you soon. But yeah, no, honestly, one thing you said on the pod last week, you said that the money that was generated in the last altcoin season was just isolated not only to a certain select few coins, but a certain select few people. And that honestly kind of shaped my perspective on that last season, because it's true. Think about Melania Trump and all of the Melania coin, Trump coin, that one coin we can't remember the name of. All of those ones, 1,000 at most, 100 people, they made so much money. Whereas compared to 2021, all of that money in some way was kind of spread across a lot more people, a larger volume of people. And so it is one of those things where I kind of thought like, oh, money was made. It just wasn't made for us. You know what I mean? So hopefully we've learned our lesson. We probably have not. But I do think there is a world in which the crypto market does still print those gains that people are looking for. We just have to understand. You said something just now I also liked as well. And man, I'm starting to give you too many praises today. I don't know what's happening. I need to buy a lottery ticket. But you said every time is different. And that, I was like, yeah, that's true. Every single cycle has been different, but the result has been basically the same.
I was caught. I was you know what I mean? I'm more than happy to be transparent. Like I feel like an idiot. How was I caught off guard by the end of the bull market, right? I only sold 25% of some of my positions, right? Up until my plan was to sell 75%. I was always going to keep 25% because I don't know where the top is, right? That's always going to happen. The same way when I trade, I have long-term trades open. I never close them all because I like to pick it out, right? That's the strategy. But I was caught off guard and the bull market ended in exactly the same place, right? Which is kind of insane, right? There's that Reddit thread where the guy like 12 years ago called the exact top for like 3 bull markets. It's insane. So yeah, that's that. Until the thesis is proved otherwise, I see no reason why this time is completely different, but also exactly the same. So allocate, for me, I'm going to allocate approximately 25% of the money I make to crypto opportunities, right? Whether it's Bitcoin, Ethereum, or insert altcoin, or insert, crypto adjacent stock, whether it's Sofi, BMNR, MicroStrategy, whatever. I think the risk to reward of that is very high. And the reason why I pick out that small amount, right, or relatively small, I know that's a huge amount if you were to speak to Graham Stephan or someone, right? But when I bought Bitcoin, it was $3,000. And that was maybe about 25% of my net worth at that time, right? So that's why I think it's perfectly viable, right? I turned $500 into $150,000 with a coin in 2021. And that's an incredibly lucky and right place at the right time thing to do. However, I would always argue, right, that it wasn't solely luck. It was right place, right time, right tools. And that creates luck. Right. So all of those sorts of opportunities, you can either discount it as luck, and that's perfectly reasonable. Or you can say, well, this person, when you see anyone, you see the stories online about the guy who did crazy numbers, right? It's like, yes, they were lucky, but also they were there, right? It wasn't easy to buy SafeMoon when I bought SafeMoon on the second day. It was a whole slog. Yeah. So it's like, I was lucky that ended up being the one, but I had also bought 10 other coins, right? $500 each, approximately. I had also learned all of these things that never did anything. I was part of DeFi Summer, where I didn't really make much money from that in 2019. And all of these things led to this one place. I had $3,000 to $10,000 floating around, right? And then I also, because of the money I made in the 2017 bull run, I also had a few $1,000s, again, about 25% of my net worth around that time, that I just put into Cardano. So it was like two bets created, like, I don't even know the percentage number from Cardano's bear market low in 2018 to the high, like thousands of percent. Yeah. Right? Those 2 bets, yes, lucky, did awesome, made a ton of money. But also there's all of these other ones that didn't do so well. So again, just like placing myself in this environment where I understand that you basically can't comprehend the difference of what's going to be changing every time we sit here in this bear market, right? And it feels horrible, it feels painful, and it definitely feels like we'll never get out of this, right? Last time there was no altcoin season, the coin that I held wasn't the one that was picked. There was every reason for it, but yet I believe again we'll be blindsided again, like, oh my god, you know, like just the other day Sui went up 30%, and I'm like, how did that happen?
Where'd you come from?
Yeah, so it's like that sort of thing, right?
100%. Well, good, man. And I think honestly, we've covered so much on the pod today. Maybe it'd even be good to just kind of like call it here. And with the rest of this week, you know, just kind of with everything that's happening right now, obviously with the Iran situation, I think for everyone who's watching, maybe who's trying to figure out what the next step is from here. Like over the next 7 days, what's the plan? For me personally, what I'm doing right now is I'm obviously watching the Iran situation. I'm not going to lie, I'm super sick of it. I'm super tired of looking at it. I'm tired of hearing about it. Unfortunately, it's extremely important to pay attention to, especially when we have numbers like CPI coming in hot. You just have to be paying attention to it because whatever happens there will shape investor mentality, and it is going to impact the market. As simple as that. You also, at the same time, you have those sort of things happening. You have the Clarity Act markup vote, which is going to be on Thursday. I think that's very important to pay attention to because that's not only going to affect crypto, that's going to affect crypto adjacent stocks as well. Something like SoFi, I think, will be impacted, even if not extrinsically, intrinsically. So I'm watching those things. I don't know. Are you watching anything else kind of over the next 6 or 7 days until we're back on the pod talking about how, you know, everything went?
Not exactly. I kind of take every day as it comes. I know what's happening in the next few days. Obviously, CPI was a big one coming out. The geopolitical tensions, I think essentially the market has digested it's over. I think that's preemptively. They're considering it over. So I do expect volatility. Most of the market right now, if you're a trader, the on-chain data and the exchange data tells us most people are now long, which in my thesis means we're due a correction. And yeah, that you just take every day as it is. And if you're in stocks like SoFi that are also down 50%, much like the Bitcoin and crypto markets are, it's about holding on, right? If you've done your research and you understand what you hold. If you don't, holding on is incredibly hard. And you know, as someone who's only new to SoFi and new to investing into it, I'm just taking it exactly how I would do Bitcoin. This is a company that makes money. It's doing everything that I want from a company. And I'll continue to ride that wave. So any opportunity that comes for the stocks that I hold, for the crypto that I hold, I'm going to take that as a investment opportunity, especially, you know, right now as we sit in these environments. You know, like the crypto bear market means that if XRP, Ethereum, and Solana go to the lows, which is higher than they were in the last bear market, but they go to the lows that they're due to, which is what happens in about, that's when I'll be loading up. Bitcoin is already down enough for me to be loading up, so I'm already loading up because I don't want to miss it in case it goes up. I'm most happy holding that. And then exactly the same, Microsoft, Meta, SoFi, BMNR, all more than happy to DCA while the stocks are down. If Amazon's down 1.36% as we speak. If that goes down 10%, 15%, I'll just continue to DCA into that. And I think it's important that people, you know, they get their cash flow, they figure out how much they can invest, even if it's $50, right? I set my fiance's mama in the middle of the bear market last time with $50 a week, right? And she outperformed almost every single person I know because she didn't even check the app. She just didn't even know what was going on. And I remember I spoke to her, I was like, you know, Bitcoin's like $110,000. She's like, what? Checked. And she was up like thousands and thousands of dollars, right? And it's like, yeah, that $50 a week, that, you know, people always get mad when, you know, the boomers say, well, stop eating the avocado and toast and you can afford a home. Well, replace home, right, with our opportunity, which is Bitcoin. Replace it with our opportunity, which is maybe even Meta stock, maybe SoFi, whatever, right? Insert here. Like, yeah, we missed the train on property, boo-hoo, but we had Bitcoin, right? We still have it. And now it's down 50% and no one wants to hear about it. So yes, if you don't have avocado and toast and a Starbucks coffee every day, you will save like what, $20 now? It's insane how expensive things are,
real talk.
right? So 2 of those a week, put it into Bitcoin, sort yourself out, check it in 10 years.
Yeah, man, Cool, bro. Well, look, I think we are at about that spot. Everybody, if you have enjoyed, of course, the show, this is only the second episode of the Open Wallets podcast. So if you guys have been enjoying it, please, I know I hate being that guy. Like the video, comment down below. We do try to respond to every single comment. That is something that we, of course, like to do. So make sure to leave some comments down below. All of our channels are linked down below. Connor and I both have 2 channels, a crypto channel and more like stock traditional finance channel. Sam has a channel as well. So check out those links down there. We'll also be posting some more videos throughout the week. So make sure to tune into those. And yeah, I think we're good on episode 2.
We're also on Spotify and Apple Podcasts. So if anyone does fancy supporting us a little bit more, a like and a comment on those over on Spotify and Apple Music would go a long way. We appreciate you all.
Appreciate it, guys. See ya.